On March 12, 2020, as the world held its breath, Avianca's fleet of gleaming aircraft sat silent on tarmac, their engines still warm from the last flight that took off before the sky turned into a global prison. In that moment, the oldest airline in Latin America, born from a modest Colombian carrier in 1919, found itself on the brink of a crisis that would echo through the continent's skies for years to come. Founded in the aftermath of the First World War, the airline began as SCADTA, a modest mail and passenger service threading a fragile network of a handful of wooden biplanes across the Colombian Andes. The early pilots, more adventurers than professionals, braved treacherous mountain passes and unpredictable weather, turning the impossible into a daily routine. By the 1930s, the airline had secured a government contract to connect remote mining towns, and its reputation for daring reliability grew faster than the propellers on its aircraft. The 1940s brought a new era. A merger with Pan American's Colombian subsidiary created the modern Avianca, Ferrovia's del Continente Andino, and the airline expanded its reach beyond national borders. Post-war optimism fueled a fleet upgrade to Douglas DC-3, and later to the sleek Boeing 707 of the jet age. By the 1970s, Avianca was the flag carrier of 5 nations, operating routes from Buenos Aires to Miami, and its distinctive white and red livery became a familiar sight on the tarmacs of every major Latin American airport. The 1990s marked a turning point. Deregulation across the continent opened the market to low-cost competitors, and Avianca responded by forming strategic alliances. In 2004, it joined the Star Alliance, gaining access to a global network that promised passenger growth and shared resources. The airline's stock surged, and investors praised its aggressive expansion into Central America, the Caribbean, and even Europe. New aircraft, A320s, A330, and later the fuel-efficient 787 Dreamliner, filled its hangars, and the company boasted a modern fleet that seemed immune to the turbulence of the market. Yet beneath the polished exterior, warning signs began to surface. The early 2010s saw a relentless rise in fuel prices, while the Colombian peso weakened against the dollar, inflating operating costs in a currency that paid for most of the airline's expenses. Labor disputes simmered in Bogotá, with pilots demanding higher wages to match the rising cost of living. In 2015, Avianca's earnings report revealed a thin profit margin of just 2%, barely enough to cover maintenance and debt service. The airline's balance sheet grew heavy with bonds issued to fund fleet modernization, and analysts warned that a sudden market shock could tip the carrier into insolvency. The first real tremor arrived in 2018, when a series of mechanical failures grounded a portion of Avianca's A320 fleet for weeks. Passengers were rebooked on rival carriers at a premium, and the airline's reputation for reliability, its most valuable asset, started to crack. The following year, a sharp dip in tourism to South America, driven by political unrest in Venezuela and economic slowdown in Brazil, shaved off millions of dollars in revenue. Yet Avianca pressed on, betting on a projected resurgence of business travel and a planned merger with a Colombian low-cost carrier to diversify its portfolio. Then the pandemic struck. In early 2020, governments across the globe imposed travel bans, and the airline's passenger numbers collapsed by more than 80% within weeks. Revenue plummeted from $5 billion to under $1 billion, while fixed costs, aircraft leases, airport fees, and staff salaries remained stubbornly high. The company's debt, already towering at $8 billion, became an unmanageable weight. On May 1, 2020, Avianca filed for Chapter 11 bankruptcy protection in the United States, marking the first time the storied carrier had ever sought legal sanctuary. The filing listed a staggering $6.9 billion in unsecured debt and a $1.2 billion cash shortfall, a fiscal wound that no pandemic relief package could fully mend. The collapse rippled far beyond the balance sheet. Over 15,000 employees faced furloughs or layoffs, and a generation of pilots, flight attendants, and ground crew watched the airline that had defined their careers dissolve into legal paperwork. Smaller airports across Colombia, Peru, and Ecuador felt the loss of a daily lifeline as routes were abruptly canceled, isolating remote communities that relied on Avianca for medical supplies and essential commerce. The airline's creditors, banks, bondholders, and leasing firms, entered a prolonged negotiation that saw the airline's assets stripped and restructured, while a new entity, Avianca Group, emerged from the ashes with a drastically reduced fleet and a leaner route map. In the years that followed, the reborn Avianca attempted to regain a foothold in a dramatically altered market. It cut dozens of long-haul routes, focusing instead on regional connectivity and cargo operations that proved more resilient during the pandemic. The airline secured a modest government loan to keep a core set of aircraft flying, and it renegotiated labor contracts, offering profit-sharing schemes in exchange for wage concessions. By 2023, passenger numbers had recovered to roughly 60% of pre-pandemic levels, but the airline's brand, once synonymous with pioneering spirit, now carried the weight of its own vulnerability. The aftermath also reshaped the broader aviation landscape in Latin America. Competitors such as LATAM and Copa seized the opportunity to expand into former Avianca strongholds, while new low-cost carriers emerged, betting on a post-COVID traveler who demanded cheaper fares and flexible booking policies. Regulators tightened oversight on airline financing, mandating higher capital reserves to prevent a repeat of the 2020 collapse. Subscribe to The Collapse for more stories like this.